You must read this slide because this tells you about how we do our analysis, about you using the analysis that we provide, or anybody sharing analysis that you use, and the important aspect of trade ownership. You must own your own trades if you want to be successful in the financial market. Stock market for the week. Okay, here we are. Here's our market brief. Well, stocks are strong with a focus on the December 9th to 10th FOMC meeting that's coming next week. Analysts lean towards a 25.25% rate cut. Powell might show restraint because of the oncoming dovishness of the appointments that are likely to be coming as Powell's time is coming up here, and the president wants a much more dovish Fed, one that he can control. So he's going to flood the zone. He already has Besant out there who is just simply out there spewing the president's desires, and Hassett, who looks like he's going to pick, is a perfect inflationary combo with Besant. So no matter what anybody is saying about the potential for inflation, these two can easily be inflation pushers, as if there were complaints about government spending and government debt from the previous administration, well, these guys aren't slowing down on that at all. So are interest rates going down with the potential for 3 cuts in 2026 as expected? I say no. And is inflation coming down, setting up easier conditions? I say no. I'm going to show you some of that in analysis going forward. For the week, well, the metals are mostly stronger. Silver and copper had very big gains. Silver got very close to $60. I have been buying silver for years, and somehow when they get this strong, you say to yourself, did I really buy enough? Well, I'm happy to have what I have, silver and gold. And gold and platinum, well, they're stalling here. We saw silver and copper as the stronger ones. Gold and platinum have not convinced me of any kind of a breakout yet, and we certainly may get into a corrective period ahead before these things can storm any higher. But overall, silver and copper still looking really good. AI stocks, well, they rebounded after having some pretty big declines, and several, in my opinion, are very damaged. Amazon, Microsoft, Meta, Nvidia, Oracle, these are bad-looking charts. Yeah, they had rallies, they had big pullbacks. Everybody may think that's an opportunity, but these charts are setting up dangerously. Some AI stocks are still strong, however. Google, Broadcom, they look really good. MU, that's a Micron, well, not really an AI stock, but it's certainly a tech stock in the semiconductor category. That one looks really strong. So some still looking strong, but some are very damaged. And for this market to keep going up, it's going to have to find buying in the other 400 and something stocks that weren't really in the focus. But when I show you the RSP, that's the equal weight analysis coming up, you'll see that, well, they've done just fine. So anybody who says that the other 400 and something stocks were left behind, well, that isn't true, and I'll show you that chart. Stock indexes for the week, well, they're slightly higher. The Friday PCE came out in line at 0.3. And that really helps as the stock market moved up sharply on that news, figuring that, well, that means there's no threat to the Fed because they look at the PCE. And that means that the rate cut is more likely to come on this next coming week. For the week, it looks like we have gains now of about 0.6% to 1.2%, depending on which index you look at, as the stock market moves up very close to what were the all-time highs before it had about a 6% pullback on the indexes and then moved up. If you remember when I started giving the analysis for the correction we thought was coming, I thought it would be at least 6%, but I thought the potential would be for 10 or 11%. Well, certainly that is not happening, as the correction, in my opinion, has ended, and I'll show you what these things look like as we move forward. So now let's move into the stock market, which, of course, is at very, very near the all-time highs. All of the discussion, of course, is that the AI stocks have led the way. They've been the ones that have been responsible for the upside move. But look at this, and you can see that the equal weighted stocks, the RSP, this is the other 490 stocks. They're at the all-time highs. We actually had a breakout today where it went up there. So any of this talk about, well, you know, it's all AI, it's crap, because this is the equal weighted, and the whole market has moved up. So, you know, it's not like they've ignored this. Right now, we're getting strength coming from the small caps. That's helped lead the way back up here. But overall, the breadth has been improved, and we can see that as we've seen the Russell do better. I'm not going to show you the Russell today. We're going to stay on the S&P 500, but you can see that. Now, what are these arrows? Well, I'm showing you in here that when you get into these rising phases right over here, you get strength. And in this case, this rising phase was this 37-week cycle right over there. The 13 and the 26, that really pushed on the upside. Here you can see the same thing. There was a little bit of fight from the 37, and you could see that pullback right over there. This is how even out of phase cycles align, and we'll find out about the strength of that 37 week as we start to move into the early part of 2026. But you can see strength right in here. This cycle, a right-hand translation. In other words, it peaked way on the right side. It says you're going to keep going to the upside. The same thing here. Same thing here, but it made a left-hand translation. What does that mean? The cycle peaked on the left side over here. It broke this cycle support. What did that say? It would decline all the way into this timing here. Bullseye. Spot on. You can see that. My analysis here was that it would come down one more time and test in here, and I was proven wrong on that as the market had a V-bottom and moved sharply up. Here's your right-hand translation again. That says that this rally right over here we're in would make a new high. Well, it just did. Now the question is how high and for how long? Don't really know. We've got on the equal weights right over here a target of 198 to potentially 203. That's still a long way up. It's something like 4, 5, 6% on the upside, which is potential into the early part of next year. Now see this cycle right over here. I've been talking about a decline into the third week or so of December. So this is in alignment with it, a potential pullback in here, but not a breakdown. If it would break this level, well, forget about it. It's in really bad shape if that were to happen, but we're not really anticipating that now. Let's take a look here at the daily chart. Look at this beautiful analysis. Now, I've put in the Hurst envelopes in here so you can get a real good idea as to how these cycles shape up. And this was a little double top in here. This was that corrective period into mid-November. That's this one right over here where it made that cycle low on the weekly chart. And now here's what we're looking at. This is where you get that 37-week dip down over here. But that's a buy pending area because this is very likely to form bullishly and then move again over here into early part of the year. But this is that dip into third or fourth week of December. Yes, that would be not in line with favorable seasonality, but I've got to go with what I see as the rhythms that are here in the market, the money flowing in, the money flowing out. And I think we're going to, got up into this area here. We'll get a little period of money flowing out, and that's likely going to give us a buying opportunity for short-term traders. So I wanted to show you how this looks looking at this rising phase right over here, you can see, and how that sets up on the daily chart is each of these cycles on the daily chart live inside of this rising phase here on the weekly chart. This is how multiple time frame analysis speaks to you. And you can see that once this moved up right in here and got past I took it out of there, but the 78.6%, that gave us a warning that this had repaired. This is the upside turn in momentum right over here. It tells us these cycles have bottomed. And now the only thing we're looking at is this dip right in here and potentially right in here. And I'm going to show you on our ranking system how you can see what that timing is on a lot of stocks. Let's take a look here at SPX, the S&P 500. And here you can see this is very much in alignment. Actually, this did not break out where RSP did, got through that high level. And you can see I'm pointing to this is really the range that we've been in here for about more than 3 months, and maybe we pull back in here. See this little faint line? That would be that 37-week average that we're looking at. Then, come back up in here as we would expect into the early part of the year, making new highs. That's the S&P 500 weekly, as this now is very much supported, telling us with the upturn in here that early November, that mid-November low was the trough in here on the early side, and then probably going to get a little pullback in here there. And then after that's over with, then moving up to new highs into next year. So looking for a Christmas rally, I think it's going to be sometime just before Christmas to New Year's is where I think that would align pretty well. So that's a look at the SPX on the weekly. Here it is on the daily, and you can see in here that this cycle clearly made its bottom, and we were looking at that 17-bar Russell. That really disappeared, and the Russell now merged with the other indexes. So that's just faint in there, and we'll be removing that because that is no longer affecting the market. And you can see the upturn in here. This was the first negative readings we had in like 6 months, but then it flipped back and turned positive as everything did right in here, again warning us that November correction was over and the market is likely to move up to new highs. Now, if you look at this cycle pattern in here, I'm just going to duplicate that. And this kind of shows us that somewhere in here will be that dip in towards Christmas. And then what we get in here is the next move up there into the early part of next year. So that's how I would project this. This is really looking like a positive pattern. And our analysis has to be that we're going to see the market move up to new highs into the early part of next year. My big picture analysis coming at the end of the year is going to show you a bear market next year, but we're going to get to new highs first. I mean, this is pretty clear. The only way that could change is if this low goes. That would be that low right over there at 65.2192 right there. If that was broken right at that level on the SPX and broke the downside of this range, that would give us a significant warning that the top is in place. In the meantime, everything that we're looking at, the sum of the evidence says that the stock market may pull back into December, but then likely will be moving up to new highs in January, potentially February of next year. So that's a look at the S&P 500, and this is our ranking system. So this is just an amazing application that our level 3 and 4 members get. And what this looks at is the most popular traded symbols. That's the most popular ETFs, all the high flyers, the widely held, and the best optionable stocks. That's one of the important reasons that I wanted to build that, and why I built the OBI that you can see right over there. So you can scan here on directional bias, in other words, which are the strongest, which are the weakest, or market outlook. Let's just take a look at the market outlook right over here, and you can see if I look at this, it will scroll to very bullish or very bearish. Let's look at directional bias right over here to the very bullish ones. And you can see right over there, the ones that are bullish and very bullish. Let's look at the directional bias here, and you can see the ones that are very bearish and bearish right there. What this does is it builds the algorithms off of long-term, intermediate, and short-term, and then gives us a narrative. And here it tells us, like Netflix, it's very bearish. It says technical analysis favors the short side. Well, we got a big bounce here. As they're likely to be buying out Warner. And but this tells us, well, it's likely to fail in here. The intermediate at N3 means that we're in the most negative cycle phasing. That's what that means that you see right over there. And here on the OBI, it's N3. It says keep your options positions biased to the short side or long side, in that case, the short side. I clicked on OBI there, and you can see the ones that are N3 right over here, the most negative, and you can just scroll down right over here, and that will help you see which of the OBI are most negative. The ones that are orange, P1 orange, means it's so strong on the upside, it's become overbought. You could see bullish overbought right over there. It says technical analysis favors the downside short term, and that it's a positive intermediate condition. So you'd probably be looking to buy natural gas on a pullback, something similar in here for the corn market. So, or if you want to go down to the most bearish stocks right at the bottom of this, well, let me just click on OBI right over there. And we'll get the red ones to show up. And this shows you right in here, you know, technical for Baidu or Bob, they seem the same, which is technical analysis favors waiting on a short-term signal for the most favorable setup because it is neutral to slightly bearish. So, you know, it tells you when there's something setting up and tells you when there's not. This is so good, it's unbelievable. Now, when, you know, if I look at the, I'm just going to reset the view right in here. That might take a second. If, you know, I talked about a lot of the stock market pulling back into the third week of December, let's look at the cycle analysis only. This is so good, it's unbelievable. And we can then scroll down and see which of these stocks look like the daily patterns are likely to pull back into December. Look at Apple. That says 1223 is the next dominant low. That's the average range to come down and make a bottom in here. And you can look at Applied Materials, 1217, AMD is 1222, and you can see that it gives you all of this key timing on many of these stocks. Broadcom 1217, Boeing 1230. All of these say there could be pullbacks back into December as you see that. So, and of course, if you wanted to see our charts on any of these, you could go here. You could look at the Apple chart, and you could see that's the weekly chart right over there. And if you wanted to see the daily chart, well, that's the daily chart right over there. So these are updated all the time. This is so much information. It's just incredible. So, and of course, you could search on a specific symbol in there, and that would then give you the ability to just look at the ones that you're interested in. This is the ranking system. How do you use it best for you? Well, let's see on the bottom right here. There I am. That's Slim AI. It will talk to you if you start a call with it, and it talks in my voice. And you can use that if you're not a member. Even the greeter on the front page of the site will do that with you. But I'm just going to ask it. Looking at the rankings system, what are the top 5 ways a member can use this? And it's going, I'm going to send it up there, and it's going to think for a second. And by the way, it refers to me as Steve right over there. That will give you an answer right in here because it knows me, because I'm logged in as me. And it says you can monitor market intervals, you can focus on the leadership stocks, confirm the timing of trades, filter out the noise in the markets, adjust your risk management. You could ask it anything about trading in the markets, and it's going to have an answer for you. That's Slim AI. And so anytime you're looking at one of our applications as a member, you can ask about it, and it will really help you with that. That is a look at our ranking system, which is just absolutely phenomenal. And that is everything I'm going to show you in the analysis today. I kind of went a long way on this, but I hope that information I shared with you is fantastic. Don't forget, take advantage of our holiday specials, where you give the gift in a non-recurring membership, and we send you back a gift of an Amazon gift card.